Gold is ending August under pressure as markets continue to digest last week's comments from the Fed, but one bank thinks there's a clear correlation between gold prices and the level of monetary expansion by central banks. And they say the metal should be about $400 from here. Joining us to talk about this today is Frank Holmes of U.S. Global Investors. Frank, good to see you again.
It's good to be back with you.
So Frank, let's talk about this note from Deutsche Bank. They came out this week saying that gold should be trading around $1,700 an ounce. Now, to be clear, they're not forecasting gold to move to $1,700, but they're saying that's what gold should be worth right now. Do you think that sounds about right? Do you agree with their theory here?
Yes, I do. I think it's very fair and reasonable. Their analysis of taking a look at the major central banks that have been consuming gold and the amount of money they've been printing, and it's substantially different. So they're saying that on a simple basis, it should be 1,700. There are other forecasts that look at inflation adjusted since gold peaked in 1980 that say that gold should be just under $3,000 an ounce. And then there's another analysis by James Turk, and I think it pushes close to $8,000 an ounce when he looks at all money aggregates.
$8,000 valuation on gold right now.
That'd be a fair value,
right,
based on the amount of money being printed. So I think that Deutsche Bank is on the conservative side, but is extremely fair and reasonable in their analysis, their process.
So let's take a closer look at gold here. It's under pressure this week. It hit a 2-month low today. Do you think things will turn around post Labor Day? Do we need to wait for people to be back at their desks here, Frank?
Well, I think the big issue it has to do with real interest rates and interest rates in the U.S. What we've seen in the past 20 trading days is the 5-year government bond yield rise 12% and the price of gold is off 2%. That inverse relationship is so powerful and significant. So the threat of rising interest rates, the rate hike coming in September, all that boogeyman stuff is creating pressure on gold and the idea and the concept of the dollar rising.
Well, it's also an election year, so do a lot of past theories go out the window, Frank, when it comes to talking gold?
I think so. I think it's just different dynamics, but I think these cycles are important. A classic would be August is usually a horrific, poor, rotten month for stocks. And the stock market's done extremely well when you look in the past 20 years in the month of August.
All right, Frank, on that note, what's your touchdown pass going to be this week? What are you eyeing before the long weekend?
Well, Friday's going to be jobs. And why that's important is because it's the next significant job report doesn't come out to the 3rd week of September. And between now and then, will the Fed funds rate rise? And that will create lots of short-term skittishness in the capital markets.
Frank, thanks so much for joining us.
Good to be with y'all. And pre-season NFL started.
Absolutely. Thanks, Frank. We look forward to it. And thank you for watching this edition of Kitco's Gold Report. We'll see you tomorrow reporting from New York. I'm Daniela Cambone.